Good day and welcome to SCO BRICS Insight, where we look at what's really going on in the world of the BRICS. Now, I'm sure most of you will be aware that there's some serious events taking place in the world of global finance. The combination of the August heat and the recent collapse of the Asian stock markets, particularly Japan, is likely to have a significant impact on global stock markets for years to come. They've already caused mayhem around the world, and that's how the 1998 crisis in Russia began, which resulted in Russia's default on its domestic and foreign debt. It also caused the collapse of the currency, the ruble. Plus, a significant number of banks went out of business, the savers lost all their money, and many companies at the time went bankrupt, including mine. For those of you who are too young to remember the events of August the 7th, 1998, or have no knowledge of what happened, let me enlighten you. Russia was still struggling in its post-Soviet economy. Living standards had plummeted alongside life expectancy, and life under Yeltsin, who was the darling of the Western economists, had implemented so-called reforms that had catastrophic effects. People had jobs, but large number, particularly in the public sector, education, etc., didn't get paid for months at a time as the government didn't seem to have any money. The Russian government was borrowing money on the markets at suicidal rates of interest of 30% per month, and every month was only raising enough to pay off the previous month's debt plus interest. Almost everybody, Western banks particularly, were buying bonds, or GQOs as they were known, and making huge profits, and then boom. The central bank then defaulted, and almost every bank went out of business. Savers and ordinary depositors lost everything. Now bear in mind, back then the central bank reserves, the Russian central bank, were around $15 billion, which is about 2% of what they are today. And the gold reserves were about 200 tons, which is about a tenth of the current holdings. Now I can't really explain the level of the economic catastrophe that happened back then, but I'm going to try. This joke will give you some idea, and it isn't one of my favourite jokes of all time. It's about a man walks into a Russian bank as the crash is all going on around him, and he says to the girl behind the desk, reception desk, and he says, "Who should I see about opening an account at your bank?" She stares at him and she simply says, "A psychiatrist." Now that illustrates how bad it is, and I'm sure in America there are people who are not looking to their brokers but are actually looking to their psychiatrists for some sort of answers. Now before I continue, I'd like to make an appeal. If you like and enjoy my videos, you can help me fund the channel and my website scobricsinsight.com to further develop it. You can do this by making a small donation, which is done by clicking on the thanks button at the bottom of the video screen. Everybody who donates does get a personal thank you from me, and I'm thanking you all in advance. So now, the recent events of Black Monday on August the 5th reminded me of what's the French for déjà vu, which is something a French film director once asked me in all seriousness. Now, the catalyst for the Japanese stock market experiencing decline, reaching a record low, was obviously to do with the interest rates and the yen. But that was followed by a similar trend all across the Asian markets, and that again was very similar to what happened back in 1998 in the emerging markets, and the long-term capital management that caused the turmoil, not just in emerging markets, but it spread all the way across the world to the Western stock markets. Just like back then, it led to a memorable decline in European and US markets, with the Nasdaq for this week following 17%. Now, Western business publications are now expressing concern. It says that investors are reacting with a flight to safety and moving into cash. The recession is proceeding in a predictable and orderly manner. Now that represents the most significant collapse in the West since 1987. However, in Russia the situation is pretty static and they're not really affected. In fact, it's a bit like the crowd strike caused computer outage in the West, where everybody was affected and their systems were shut down. Russia was not affected because they're not involved with CrowdStrike or companies like that. They're also in the stock markets not got large amounts of Western capital. So there was no rush to the exchange offices. There's nobody holding dollars. The volatility on the Moscow exchange was only 2.5%, and the ruble even gained against the US dollar, which seemed to be quite a mocking gesture. Now, despite the economic turmoil, Russians are actually still enjoying their leisure time. Most are at the beach or at the dacha drinking tall drinks in large quantities. In fact, there's no discernible impact at all of this turmoil on the global markets in Russia. I mean, the situation in August 24 is very different from 1998. And if somebody had told us at the time, we would not be bothered or concerned about crisis in the Western stock markets. It would actually be difficult to believe. But that's because Russia's now got a sovereign economy and it's characterised by its stability. And needless to say, Russia's been pursuing this course of action since 2014, and the imposition of sanctions by the West and the US particularly and its useful idiots has played a significant role in enabling Russia to make itself immune from the current market mayhem and chaos and avoiding the impending collapse with the global crisis. I mean, shares on Western exchanges have rebounded slightly, but I mean, it's too early to say that the crisis is over. I mean, according to the Financial Times, the investor fear index is rising rapidly, and it's clear that the unprecedented generosity by central banks has been in place since 2020, when trillions were thrown into the economies of Western countries, has come to an end. I mean, the term Black Monday has been attributed to the poor employment statistics in the US. However, a more significant factor contributing to the sell-off was the precipitous decline in Intel shares and the announcement that Warren Buffett, the renowned investor, divested nearly half of his holdings in Apple and moved to cash. I mean, currently his investment firm Berkshire Hathaway maintains a cash reserve of $277 billion, which is a record level, which in itself suggests that large investors have taken a defensive strategy in anticipation of more potential challenges on the economic front. Although I do hope Mr. Buffett is not holding all his cash in US dollars or US Treasury bills, or he might actually get a big shock for investing in what he thinks is a safe haven. I mean, 24 years ago, at the peak of the dot-com crisis, Buffett also made the prudent decision to divest himself from all his holdings in internet stocks. Now, this suggests to me that the man's got either an incredible gut instinct or he's a level of insider knowledge that's not available to us mere mortals. I mean, earlier this year, just before he initiated his significant stock sales, he said when the economic shocks occur, and they will, his company would aim to mitigate the impact on them. Now, the expectation that the US will face significant economic challenges in the autumn is a widely held view, not just in America. I mean, the final step is to determine who is responsible. Now, some Democratic media outlets have suggested that a second Trump term would have a negative impact on the economy. Plus, Trump himself has referred to the market decline on October as a Kamala crash, although she's hardly had anything to do with policy in the Biden White House. And anybody who's heard her talk actually knows she has the economic knowledge and understanding of your average fruit bat. Nevertheless, anybody who assumes the role of president, whether it's Trump, Harris, or even neither of them, the likelihood of a stock market collapse remains extremely high. I mean, the sequence of events preceding the previous economic crisis, particularly the Great Recession of 2007-2008, illustrates that the Federal Reserve persistently increased the key rates of interest on the eve of the crisis. Now, this is similar to its recent policy actions. I mean, the Federal Reserve is facing pressure from businesses and from the government, obviously, to lower interest rates, but there are obvious concerns that doing so could have seriously unintended consequences. I mean, the United States has currently experienced a period of economic difficulty that's unprecedented in its history. I mean, the dollar is devaluing rapidly, largely due to its unusually high inflation, which they're obviously trying to hide, but they are not doing particularly well of it. And if the interest rate is lowered, the dollar will become even cheaper. Now, their national debt, which is unbelievable, and it's the highest in US history, requires approximately $1 trillion, $1 trillion a year just to service the interest on it. Now this figure is colossal and is greater than the country's total military expenditure, which is by far the largest in the world by a factor of 8. Now the world's undergoing a process of de-dollarization, a trend which Janet Yellen, the former chair of the Federal Reserve and current Treasury Secretary, has publicly expressed concern about. Now, obviously, the sanctions on Russia and its relationship with the BRICS has a lot to do with that. Now, everybody can see the significant bubbles that have formed in the US real estate and stock markets, and it's not just there, it's obviously in Europe. The UK suffers from it too. I mean, these figures demonstrate that the quantity of fictitious money in the Western economies is significantly higher than the actual value of the so-called tangible assets, and that's by a serious order of magnitude. Now, this imbalance can only be resolved by a serious and significant economic downturn or a global conflict, where the excess capital will effectively be eliminated. I mean, it's worth noting that the US's European partners are in a very similar position. They're compelled to align themselves with Washington's economic policy and are going to face the consequences of doing so. I mean, the situation on the Western stock markets is similar to the phrase from the novel, "The house was doomed. It could not help but burn down," and indeed at 12 o'clock at night it burst into flames. Set on fire at 6 ends at once. Russia, on the other hand, is immune. And it'll emerge from this global crisis stronger than before, with its energy, industry and food security intact. And it's not without reason that the Chinese government has stated that any crisis can be viewed as an opportunity. I mean, one of the key advantages now was the West will be grappling with these economic crises and will lack both the capacity and the resources to continue to attack economically and politically Russia or China. It now needs to focus on mere survival, not the luxury of waging useless trade wars that it was never going to win. Now, thank you for watching, and please like and subscribe. If you've enjoyed this video, you can help me fund the channel and the website by clicking on the thanks button at the bottom of the screen. Please like and share, and also the comments. Please use the comment section. I do love reading and responding to all your comments, so please do respond. Thank you very much for watching. Goodbye.